we're going through a bit of a tech winter. There is hope for more unicorn babies to come up, and what needs to be done?
I think yes, a lot of unicorns are ready to be there, because sometimes a unicorn is not a solution for a good return. Building a good companies that can really return good money.
Taking risks to the extent that you go into markets and countries, convince people or, invite people to invest in tech in Nigeria in 2012, some laughed.
But I think two observations from my perspective. One is scalability. Now, what scalability means, in my opinion, is also defensibility. And I think that's what a lot more founders need to think of.
The fintech market is very different in the MENA region and the GCC in comparison to the global market. And it gives a lot of investors this hope and this opportunity to invest in this region.
That's solid.
Hey, welcome to Silverbacks Valley. I'm your host today and my name is Ibrahim Sagna. Gentle reminder before we start, click that subscribe button and never miss stories of founders and funders changing sports, tech and entertainment from Africa to the rest of the world. Now enjoy the show. This episode is supported by IRL, an original podcast from Mozilla. Bridget Todd, its host, invites you to a new season titled People Over Profits. If you are into artificial intelligence, AI, this is the show for you. Download Mozilla IRL wherever you get your podcasts. We at Silverbacks Valley are big fans.
I'd like to first thank you all for attending and to thank my friend Kareem, who's just lied a bit about the age. I think he's more than 25. It's great to also have a truly outstanding panel here with some old friends, some portfolio investments, and also some new friends. And you will see from what you've heard a few minutes ago from previous interaction with partners, co-investors, when the mood was a lot happier, things have changed a little bit over the last year. We're going through a bit of a winter, a tech winter. But it's not all lost. I'm going to start the panel with our eminent Dr. Mohamed here, who probably gave birth to the first unicorn in the country. So we will start by asking him whether there is hope for more unicorn babies to come up and what needs to be done.
I think yes, a lot of unicorns are ready to be there. However, the question would be, is it good to have a unicorn as a return or not? Because sometimes a unicorn is not a solution for a good return. Building a good companies that can really return good money to LPs I think it should be the objective. So if you invest in a company with that in mind, and lucky you have a unicorn, that would be great. As DisrupTech, we have a unicorn in our portfolio, and we're happy that we had participated in the journey, and we're looking forward to get a return from exiting one day from that. However, we have made I would say, a very decent return from a non-unicorn exit. So I think because Africa is different, and Africa is not a Silicon Valley, and this is something that I would always have to talk about, because we have some issues that is chronicle and will continue to be there. And as much as there is a great opportunity in Africa and there is a huge opportunity to make money in the tech space, you have to deal with Africa, to invest in Africa the African way, not the Silicon Valley way. And Africa has very similarities in the problems and also have a lot of similarities in the macro issues. Currency, devaluation, challenges in the regulatory environment, capability to cash out and exit. So if we all agree that this is something that is different, we have to create our own African way of investment. If I would describe it, I would describe it as being disciplined, really factor in that there is macro issues that you're going to face along the way. And if you put that in mind and you ask the founders to act in a way that is more of doing more with less, that will make you get a good return as a company, either as a unicorn or as a good exit and a good return.
Thank you very much, Doctor. So I'll summarize: stay disciplined, pursue an African way, and getting a unicorn is not necessarily the solution. Getting a good company is why we get out of bed. Thank you very much for all that wisdom. Mariam, over to you. Mariam and I go back because their fund allowed me to participate in 2 former unicorns, so make some pretty pleasant gains. I'll be curious to know whether those old habits will continue. And in the case of Lofty, they not only are present here, but they are active in probably over 30 different African markets. But I will not steal your thunder, Mariam.
Thanks very much for that. Yeah, I mean, it's interesting, you know, I liked what Lexi was saying about, you know, it's obvious, right? A lot of us that are here, you know, are willing to take risks. But taking risks to the extent that you go into markets and countries that aren't obvious, that you might know a little but not too much, was really, you know, key for us. When we first started to, you know, convince people or, you know, invite people to invest in tech in Nigeria in 2012, some laughed, right? And then when our Nigerian founding partner, you know, started to invest as a Nigerian in Egypt in tech startups in 2017, that didn't come without its challenges. You know, extend that till today, where, you know, of course, right now, a lot are looking at, you know, the Francophone bloc. We already have a little less than 10 investments there. Last week, our team was in Zambia, Gabon. I mean, this is really critical, right? You know, there's a lot of talk about the Big Four, and obviously Egypt being one of them. We're probably going to touch on it in this session. But one of the things that I liked was in the last quarter, 30% of venture funding went to what is called rest of Africa. I mean, later on we might decide if we like that terminology, but I think that's really critical because we all know that, you know, you can't be prosperous on your own if your neighbors aren't definitively, you're not, you know, that definitively makes your prosperity quite fragile. And so I think most of us here firmly believe in prosperity across the continent. And one thing that's extremely important is to ensure that, you know, ultimately we're looking for returns, so quite frankly, we're obviously heavily skewed towards investing in the Big Four. That's where the most active markets are. Egypt, of course, being one that, you know, naturally have a personal bias towards. But really looking around extension beyond these markets, the cross-pollination of cross-pollinating ideas, expansions, and businesses, you know, I think regionally and then across regions. We're seeing a very strong corridor. One thing we were able to do is kind of establish a very strong corridor between Nigeria and Egypt. One of our portfolio companies expanding from Nigeria and Egypt, and yesterday was with a health tech, an Egyptian health tech expanding into Kenya. I mean, I think so that, you know, kind of, once again, just that extension within a region and then across the regions is really critical.
Excellent, Mariam. So the key point I take away is intra-Africa trade. Make sure that your neighbor is in good health and collaborate. And don't stay only focused on one market. So diversification. And in terms of diversification, my good friend Dina, obviously, they have one of the oldest firm in the sector that basically fundamentally manages the kindergarten for all these aspiring adults. And they've been doing it for many years, but you have been one of the first to diversify out of Egypt. So why don't you tell us about what you guys have been seeing in the portfolio, what are the surprises you see, and what are the things you warn against, and what should we do to mitigate them?
Thank you, Ibrahim. So yeah, it's been a tough 12 years. We saw some of the worst, the worst times of venture capital. I mean, you mentioned sort of the early days in 2012 when people laughed. We got that a lot. And in 2012, I think in an asset class that is already in the Middle East and wider Africa perceived as a much higher risk asset class, to try and do seed was just completely absurd. Like for most people, it was just like throwing money out the window. And so it took Flat 6 Labs quite a bit of time to sort of establish that if done right, seed is not necessarily any riskier than a Series A or Series B venture capital. And it's just a very different investment thesis and a very different investment model to later stage investment. But it is, I mean, you speak of kindergarten, and it's interesting because I always anecdotally say the average age of founders when we started Flat6 Labs was close to 24. Now it's closer to 35. And so actually the market has matured significantly. I mean, it was kindergarten. I mean, I think we still are the first interface and usually the first point of contact in terms of venture capital. But there's a whole new breed of founders that we're seeing now, and accordingly a whole new breed of transactions, right? I remember when Flat6 Labs, I mean, it's a well-known fact, but we used to be so greedy as the only people in the market, and as seed investors, we would take 15% for our seed ticket. And then we realized that that's no longer market competitive, and so we dropped it to a maximum of 10%, which drove valuations to maybe 2 million Egyptian pounds at the time. And every single someone in the market turned around and said, you guys are disrupting the market, you've increased valuations, how could you? Now the founders have completely sort of non-founded expectations of valuations now. 10 years later, and you look at seed and pre-seed transactions that are in the millions of dollars without any validation. And so the market has shifted, and I guess, Ibrahim, it goes to your point on what are the goods and the bads, right? It started out as a statement of we're going through winter. I'm Egyptian, so winter for me is an unknown concept. But you think of it, and it's true. There's good and bad in that winter. I think we had some really good years, and for us as people who had to struggle with, again, proving an asset class, and many people saying, oh, this sounds like a good CSR project, and we would tell them, please just give us exactly the same check to invest, and they say, no, I don't need to see it back. It was a struggle, and so it was nice to see the years 2018 to 2020 and 2021 when things finally started happening. However, also as someone who's been there before 2018, I think it's good for everyone to just sort of step back, take a slow down, a breather, and to sort of recalibrate market dynamics, which is fantastic. Having said that, that did come at the cost of many founders now that are extremely struggling because it's a much drier market. Overall in Africa, VC has dropped by 50 to 60% in terms of both number of transactions and also value of transactions. In Africa, maybe slightly less tempered in MENA, where it's close to 40%. And then the second issue is that we're seeing particularly in Africa, seed as a percentage of overall transactions go from being 70% as a number, which makes sense because you want to have in a healthy ecosystem that sort of wide base of transactions that allow into a funnel for the Series A, Series B, and onwards, where now it's only 30%. And I think that for me is the alarming part, because you have to think of what's next. What's the next 2 years looking like in terms of pipeline created for the later stage investors as well? In many ways, this is also reflected into some of the transactions that you see by the Series A investors, where a lot of the times the Series A investors feel like the pipeline is drying up. And so quite a few of them have shifted upstream into doing themselves seed investments, but in a Series A format. And so, which is good and bad, because it could also lead to a market disruption in terms of valuations, but I guess someone had to sort of fill the gap of the lack of funding at the seed level. And unfortunately, I think we're seeing quite a few of the seed fund managers currently being in hiatus in between funds, which is putting a lot more pressure at the base of the pyramid. So these are, I think, some of my key takeaways and observations over the past decade, and then more recently. Q3, we're starting to see a bit of a turn in that downtrend, and so that's optimistic, and hopefully that continues into sort of next year and the end of that year.
Dina, thank you very much for that very contrasted summary. It definitely shows that there's a bit of sun, a bit of cloud, but it's not all lost. But I think my biggest takeaway from what you just said is that we need to be aware that the proportion of seed in terms of volume out of the overall activity is dropping. And that's not necessarily a good sign. But this last quarter, with the recent growth, and also the announcement of another unicorn, and I will take that opportunity to let our dear friend Tell us about it, because up to now, all the unicorns you had in the Africa GCC region systematically came from Egypt or Sub-Saharan Africa. The only one that came out of the entire GCC was Kareem. And it seems as if that has changed. Why don't you tell us about that change?
The BNPL model globally has hemorrhaged, so like to see this model succeed in the region comes to show that the fintech market is very different in the MENA region and the GCC in comparison to the global market, and it gives a lot of investors this like hope and like this opportunity to invest in this region because it is significantly different than the global market. Also highlight Tabi because it comes to show the first point that you were talking about companies expanding into other markets, either from the GCC to MENA or from across Africa, from Sub-Saharan to Egypt, and like all these countries or these markets. From a VC perspective, they're very similar, and it's very natural for companies that operate in any of these markets to expand or to switch from one market to the other very easily without VCs really being hands-on with them. And the only thing that is needed is for barriers to be removed, either support with like licenses or regulations or like helping in that sense for these companies to operate. And Tabi managed to do that, and a few other companies from the GCC have managed to do that within the GCC, and a few companies have managed to do that within Sub-Saharan Africa and Egypt.
Fantastic. So basically the collaboration should not be only with countries within the African continent, but looking north to the GCC, that there is greater strength to be built together. No, that's solid.
This episode is supported by IRL, an original podcast from Mozilla. Bridget Todd, its host, invites you to a new season titled People Over Profits. If you are into artificial intelligence, AI, this is the show for you. Download Mozilla IRL wherever you get your podcasts. We at Silverbacks Valley are big fans.
Now that we've gone through elucidating that it's not all dark, the beauty of going through a challenging time is to sit back and to figure out that these are the signals, but these are the symptoms. So out of the past recent season and change, what have you summarized to be key traits you each seek to find in a founder or in an opportunity, thus allowing you to focus better? Because obviously less capital is going into transaction, as you've pointed out, Dina, but I would assume that with the dry capital available, people are still transacting. So what are those criteria? Let's start with you, Dr. Mohamed.
I think the most important thing that we're looking for is resilience. So resilient founders are people who, as I mentioned before, are able to work under tough conditions and to do a lot with very limited resources. The FOMO that we had in 2022, 20 and 21 has created abundance of capital that actually, in my point of view, have spoiled the market, have caused the ecosystem to act in a way that the access to capital is always to be there, and it's very cheap. And realistically, that should not have been a sustainable model. So what's happening now is that we have a reality check. And although that people are looking at it as a bad thing, we are looking at it as a very positive thing. It is something that is very needed, highly needed for an ecosystem that is maturing in Africa. And tough times makes the maturity is high. And I think end of the days, after I think we are going out of this very soon with a very solid companies that can really navigate because they have built a very solid foundation who are capable to drive growth without having a lot of capital. And this is very key. I mean, companies who succeed definitely have to do that, have to be able to manage the available capital in the best way. So investing in technology, for example, and in tech stuff is very important. But investing in fancy offices, investing in travel budget is not, to me, a very wise thing to do. It was wise when you have money. It was not wise now.
Thank you, Dr. Mariam. Over to you.
Thanks. Yeah, absolutely. I think we all agree with that. And I think to build on that, you're kind of looking for a few really interesting elements within the team. Resilience, of course, being one, but you're sort of looking for three almost conflicting personalities. So, it's hard to sometimes find that within one person, so you're looking for that within the team. So the resilience is key, right? And with the resilience comes something extremely important in operating in Africa, which is operational, whether it's operational hustle, execution capabilities, but that's really key because we're operating in markets with tremendous challenges both on the ground and above the ground from a regulatory perspective. So I think, so there's that, the resilience. But then you do also need that character or personality. Once again, it might be a different team member within the co-founding team or, a different element within that personality is that dreamer who's willing to push the boundaries, which is imperative for, what we're doing is ultimately looking at, market creating innovations. People that are, imagining the unimaginable. And that's truly where the value is. And so you have, and then ultimately also then you need, the old auntie in the room, like with the discipline, right? You need that person who is, and now once again, maybe it's required more than before, but that discipline around, which is what was being said, also in the video around capital efficiency, cash management, really approaching growth, not necessarily with the Silicon Valley model, though much of us look at it completely aspirationally. It's not a criticism at all, but the reality is how applicable is it, right? So what growth means and how that is achieved. So it's sort of this, once again, if you kind of look at, let's say, like these three legs of the table, they might seem to be contrasting, but you do want to have all these elements within the team. And I think apart from, because you were saying, like, what kind of founders, it's not just characteristics within a founder, but also what is the startup doing? So at the end of the day, we like to simplify it down to, at the heart of it, Africans are traders, right? There are all these people that are going about making trades and needing to finance those and needing to move. So that's why when we come to look at how to put together our thesis, you're trying to look at kind of sectors that are large enough that they tap into the everyday economy, right? Which is why, speaking to financial services and irrespective, I think, of some of the blows that it gets at the end of the day, it's still so core, right? And it will continue to, comprise the lion's share of venture funding, for at least the near term. So, are they addressing markets that are, or in sectors that are, financial services and whether having to do with movement, so mobility, logistics, supply chain, retail, once again, kind of going around that trade. So ultimately, you're looking for a large enough that they're addressing a deep enough problem for a large enough audience. And then the team has to have those characteristics. So you got to make sure you have those in mind.
Thanks, Mariam. Dina?
So again, as a seed investor, I think to stress on the team is preaching to the choir, because when we invest, we have nothing but a team. And so it's team, and then everything else. But I think two observations from my perspective. One is, and maybe it's a summation for things that Mariam have mentioned, it's scalability. Now, what scalability means, in my opinion, is also defensibility. And I think that's what a lot more founders need to think of. It's how to be in markets that are defensible. I think it's no surprise to most of the audience in the room in that the African continent is very popular for market shocks, for FX instability, to sort of changes in purchasing power. And so I would urge founders to not shy away from the things that are still intrinsic about the African market, because we are also seeing a sort of an emergence of a rhetoric of saying, jump ship from Africa and go to greener pastures. And I think my key takeaway is that the story for Africa remains in the sense of having the youth, having the market, having the adoptability. I mean, I think of our early 3 cycles or 3 cohorts of investments we did at Frat6 Labs, they're all dead. But every single one of them has a replica now that is doing fantastically well, and it's actually on its way to become maybe a unicorn or $100 million. And the thing that has changed is just technology adoption in the market. And so the market in Africa hasn't changed. And so I feel like we need to have founders that are 10 times more resilient than they were before, because if VC was difficult back then, now it's probably a lot more difficult with the market downturn that we're going through. But I personally believe the fundamentals from the perspective of the addressable market is still there. But that means we no longer, and it goes to Selma's point, is that I look at companies that are no longer serving problems for the 5% of a market. They're serving problems for a 95% of the market, and they're serving problems that you can't avoid. And so one of our best performing companies, for example, Shifa, is a health tech pharma or a platform. We will constantly need medicine. And so looking at these startups I think is the way forward. The second point that I wanted to mention is that I feel like sometimes as a culture we tend to very quickly react, and so we've gone from a bubble market of expand at all costs to turn cash flow positive tomorrow. Neither of those work. And so it's not this or that. And I think the whole concept of VC is being able to scale and grow. And so it's going to be a very tricky period for a lot of founders that suddenly are faced with a choice of needing to extend their runway so much. And how do they not let that change the fabrics of the company in terms of massive growth that is still very sensible and unit economics centric? And so unit economics is a lot more of something that companies need to think of now, be it cash management, being the long-term vision to profitability, but they just need to be very aware it doesn't have to be tomorrow. It just has to clearly be something that you're able to communicate and think of, whereas before, when money was a lot more available, I think many founders didn't think about that.
Thank you, Dina. Sara, over to you.
So in terms of picking a founder or a company, I see it a lot like dating. So you're kind of trying to see if there's chemistry with you, this founder. You're building a long-term relationship with them. You're going to be on boards with them. You're going to be making a lot of decisions together long-term. So you want to make sure that you're picking someone that you trust, that is resilient, that has all the traits that you mentioned, and that happens from the first meeting, like from the first time you meet them, like that first conversation is where you start building the trust up until the moment like you're done with the due diligence, and then you're ready to sign the marriage papers, basically the term sheets and everything, and then you take it from there. You're with them, like you want to help them with building their company, you want to help them with introductions, you're confident when you're introducing them to new investors for follow-on investments. So that's really how I see it, and that's really how, and it's a two-way street. Like I also want to impress the founder. I want the founders to pick me and to pick VentureSouq so that we're on the best deals. And it is very competitive, like everyone mentioned. So if I'm not impressing them the way they're impressing me, then we're not going to go anywhere forward.
Thanks a lot. There's definitely a lot of great traits shared by the panel. I'll be curious to hear how are those conversations going with your pure accountant auditors when you're actually sitting and saying, this company has grown this much. You know, they've been accustomed to the arrow going up. And suddenly you're like, this one is flat, this one is down, this one is up, and the confusion on their face. Why don't you share a bit of those stories with who will volunteer first?
I guess like in the last few years, it's been very easy to communicate with the auditor. You just sort of the first year you give them the schedule of investments, like everything's up cost. The second year, it's like you have some uplifts, like especially last year, a lot of companies were raising from global or international money. And this year, like, it got complicated. Now you have to explain to the auditors, like, well, we went in the first round and in the follow-on, one of them is an uplift, one of them is a cost, one is a down, one is like a markdown, but it kind of averages out. And then you have to do that for the whole portfolio. Like, so, like we have like these 5 unicorns now, but like a couple small ones shut down, but it kind of averages out. So it's like it's a good exercise with the auditors because not a lot of them know what VC is. Like they're used to private equity and like their valuations are a bit different. So you sort of go through the exercise of explaining valuations to them and then explaining it in the region in Africa and like in the GCC where we do it a little bit differently, like it's more creative. So it's definitely going to be a fun audit season.
I'm happy to see this, not just us going through that. Dina, you too?
No, I guess I see the conversation with the auditor as good prep for conversations with the LPs, which tend to be harsher.
But more penalties.
it's a good pep talk. But no, I mean it has. I think it's multi-layered because I think everything that Sara has said stands to be true. But also in addition to our markets, whereby similar to what His Excellency Mohamed was saying earlier, there are now different applications to sort of how do you value, and there's a lot more with the venture capital industry growing attention from the regulators to try and regulate how do you value. And whereas before I can get away with management discretion, I can't quite get away with it now. And so no, it's tricky, but I think it's part of our learning experience, so it's not so bad.
Yeah, with every new season, new close. That's a good segue into the conversation with the investors, because obviously, we recently went through a couple of years of, sorry, the fund is closed, we cannot take your money. Really had given you the deadline, I can't change it. How are the conversations going now, and what are the strategies in place? Maybe we start with the legendary founder here, Dr. Mohamed.
I think it is completely the reverse. So exactly, please give me your money. No, I think I was talking to Mariam before the panel. I mean, the funds, the GPs who are raising are finding very difficult because the appetite of the asset class as a VC is changing, and the quality, the LPs are looking now for more of deep stories to believe in and to back. Also, the funds that have money rather have an issue of deployment because of the market is not as, there is no good assets in the market as much as it used to be. So both have problems and both have different conversation with LPs. I think, again, one of the things that is very much needed is the maturity of the ecosystem and the level of maturity on the LP side. I mean, of course, DFIs, for example, are very familiar with what we're going through, very familiar with the investing in Africa, so they understand and they back you up, whatever happened. But other LPs, some of them are experienced and some of them are not experienced. They just came because there was hype in this market and they wanted to be part of it. These people are worried, and you need to understand. You invest a lot of time to talk to them, explain to them what's happening and what's your plan to do that. And it's very nice to show them that there is always an opportunities to exit and to return money. So I think one of the good things that we are looking at from this conversation is both are learning, GPs and LPs are learning how to invest and why to invest and what to expect.
Thank you, Mariam.
Yeah. So I think, we can all probably agree on how painful the fundraising process is. But so our experience was unique in the sense that some of our earlier funds were, sort of angel syndicates. And so what we had, and this was intentional, to have African high net worth investors invest in African startups. And of course, and there were institutional investors as well, but they were also African. Now, as you raise a larger fund, you need to bring in more of the institutionals. DFIs continue to be the strongest supporters of African VCs from a deployment perspective. What I love is that the sovereigns are coming in with a really impressive ramp up. It's not only needed, but absolutely strategic. What we would like to see more of course, the high net worths are still there, and that's once again a function of relationship, and also, it depends on the markets that you're in. What we would absolutely like and need to see more of is family offices, right? So the problem is with the term family offices, right? Because there's a lot of family wealth, that isn't necessarily set up in that family office framework, where they're truly kind of looking at their capital and seeing how to allocate it. So that's one thing. And then those that, and so then that obviously has an impact on, do those have, will they allocate to this, kind of high risk the capital asset class? And then the ones that do have that structure are absolutely trying to diversify out of the continent. And I get it, right? Because much of their wealth is generated from the continent, and so they're looking to diversify that risk. Understand it, but this is absolutely an area where, I think there are large pools of untapped capital. And if we can crack that, our experiences will be very different in fundraising.
Great for that insight. Dina, anything different you're seeing?
I guess not. I think nothing to add. I think the only thing, again, to take note of is that a lot of us have been first-time fund managers that just deployed their first fund. And so I think it's unfortunate because a lot of even the usual suspects in terms of LPs, which are the DFIs, feel the need to show an exits, whereas unfortunately a lot of the GPs now are in a situation where it's the worst time to try and create an exit. And so I think this is also creating a bit of a mismatch in terms of higher LP expectations to justify the asset class, whereas the GPs, even the best of them, are struggling to, or not even wanting, even if they have to go through an exit at a down market. So I think that is becoming part of the challenge of trying to fundraise in the current climate. But I think I fully endorse what both Mohamed and Mariam said in terms of what we need to see a stronger market as well.
Thanks, Dina. What's the view from Dubai?
Like 2020 and 2021 was definitely an inflection point because a lot of sovereign wealth funds came into play and they invested quite a lot of money in funds, especially in the GCC. And that created a lot of tailwind. And so it was a good and a bad thing because it was good because it gave all these funds an opportunity to create first-time fund managers to create a track record for themselves, but it was also strategic money, so it made it very hard for non-sovereign wealth funds to come in and invest. But right now, like, a lot of these fund managers are raising for the second or the third time, so they have the track record to raise outside from DFIs or from institutions, and then the sovereign wealth funds are still investing in these funds, like they're ramping up or they're upping in these funds again. So like it's bittersweet in the sense that it's put them in a good position to continue operating and to continue fundraising, but with restrictions.
Great. All this is really insightful. One place where I rarely get an answer is in terms of raising capital from your local currency. Because we all sit here in our lovely continent raising capital in local currency. Because we keep on getting dollars from foreign market, from someone that doesn't live in your country, and expect that to continue. In the meantime, your daddy and your uncle across the street is not giving you local currency. Are you seeing any shift happening anytime soon, considering that most of the founders we're backing are generating revenue in local currency? Anyone been lucky and seen some accidental change at that level?
Yes, actually, in our fund, we have one of our major LPs who invested with us in the Egyptian pounds.
MashaAllah.
And this is instrumental. I agree that we have to have a lot of local money because we are investing in companies that are generating mix between EGB and US dollars. So we have to have LPs that have this mix as well to facilitate things. One important thing to show is that the valuation has also to convert to EGB. So we talk about how much money you need in EGB and what we would value your company in EGB. And then at the time of payment, we convert it to the currency that we are paying with. That's key change that we have done in the last year. And it works well because, I mean, valuating on a US dollars that's fluctuating, it does not make the transaction possible and sometimes makes it longer for everybody.
MashaAllah. Well, congratulations. I've seen some of those cases also in Nigeria, and I think it's important to push more solutions in that direction because no matter whatever sexy term you use, fintech, clean tech, it's consumer space, and consumer space consume in local currency, and I think we tend to forget that quite often. So I apologize, but we'd like to have you all give a round of applause for this eminent panel, and thank you for coming.
Hey, if you liked today's story, press like, leave a comment, subscribe, come back for more stories from the founders and the funders, changing sports, tech, and entertainment from Africa to the rest of the world. We look forward to seeing you again soon.